Hey everybody, thanks for tuning in. We're gonna kick this off for the daily chart of the SPY. Once again, the SPY had a red day. Now this wasn't a big red day, but a red day nonetheless, as you can see with these candles. Okay. Now looking at these wicks, look at these long wicks. This day right here, which was yesterday, came down to fill this gap, filled it up, went right back up above our 5-day moving average right here. Today it dropped below the 5-day moving average and it got bought up right back up, and it closed right at a 5-day moving average. It actually closed 2 cents below it. It's not too bad, right? It tried to go above, it tested a resistance, got rejected. Okay, so looking a little funny. SPY is looking a little funny. This red area right here was our area of liquidity, which right here, as you can see, market makers took out all the retail trader stop loss. Very next day, gave us this nice bear trap, and now today it just went choppy. Okay, so I mean, we got the moving averages all stacked on top of each other still. So this chart is still a buy the dip market. It's a bull market. So anytime it's dipping, I'll be looking for buying opportunities. Okay, so looking at this area of liquidity that we have here, where the market makers would potentially go stop loss hunting, looks like it's been used a few times already. So I added this new resistance line, this purple area right here. I'm going to take this out because you guys know what that is already. I'm going to take out the moving averages. It's all stacked. SPY is closed 2 cents below the 5-day moving average, which is not a good sign, but it's not too bad, right? So I added this new resistance line right here. Started from May 21st, earlier this year. We got a bunch of touches right here. So it's looking like a new pool of money that the market makers are setting up. Okay, this is where they could potentially go stop loss hunting, which means have a new price target, y'all. 443.25. I think we'll get a nice pullback over here if we even get a pullback. Okay, this is my next price target. So if SPY starts dropping, I will be looking for buying opportunities. I still have this nice support line right here where I'll also look to enter. I'll look to enter in this area of imbalance here. Have this big area of imbalance there, so we'll see if it gets filled. If it does come down to fill this imbalance, it'll most likely come touch this area of liquidity, which is where I would add around the 427, 428 range. Okay, I'll also look to enter around the 432 to 433 range if it drops, and I'll look for bounces off those levels. Okay, if we bring up the moving averages, like I told you guys before, I use my moving averages as support and resistance levels. Right now, since it's closed below the 5-day moving average, the 5-day moving average is our resistance line right now. This means our next level of support will be the 13-day and the 20. And I like to enter just below. Okay, so I have a feeling if it comes down, it will most likely come down to the 433, 432 level. Fill this imbalance, that's where I will look to enter. And if it gets lower, I will not panic. I will look for more buying opportunities, like I said, down here after this imbalance fill. All right, and if this doesn't hold, well, I'm gonna have to cut my loss. We still have more imbalance down here, which have yet to be filled, and they usually get filled, y'all. And we got a nice big gap over here, big gap around the 400 level. Okay, now that's if we get a big deep correction. Right now, VIX is still trading below the 200-day moving average, which is a good sign. However, we do have it moving up in an uptrend. Now I told you guys that the VIX inverses the SPY. It goes in opposite direction. So it's been going in an uptrend since July 2nd. The SPY has been going in an uptrend since July 2nd. That is a bearish divergence, guys. Now despite the bearish divergence, as you can see, the SPY continued to creep up and make new all-time highs. So like I told you guys, bearish divergence doesn't mean a bear market is upon us, but it could be a warning. Definitely a warning sign that a pullback is near, a pullback is coming. When will it come? We don't know, but when it comes, we'll definitely know when it comes, and I will look to buy the dip. Okay, so when I see bearish divergence, especially with the RSI and a strong bull market, for me that makes me happy because there's potentially a buying opportunity coming. Okay, so right now SPY is still looking bullish because this is still a bull trend. I have a new price target up here at 443. But I won't be surprised if we get a nice pullback, all right? And if we do, like I said, I will be looking to enter. Okay, so short term, medium term, long term. Well, medium term to long term, of course, I'm bullish on the SPY. Short term, like I said, it could be getting a pullback. If not, it'll probably go up to my price target 443, and that's fine because I'm not gonna enter. I'm very picky with my entry. I don't care, guys. If it don't come down to my entries where I'm comfortable to enter, then so what? I'm not gonna catch FOMO. It is what it is. But if it does, I will be looking to accumulate. Okay? So as far as the bearish divergence go, it's still happening. VIX is in a uptrend. It came down to the support level with the 50-day and the 20 days meeting. Okay, and it bounced. So definitely a bearish divergence. Be careful at these levels, guys. This is not where, like I said, well, I recommend for you to enter. This is the tip. It's not the tippity tip, but it's definitely the tip. Okay, and even though I believe there's more upside, there's still a lot of reasons why SPY should go down. All right, so be careful, be defensive, be very defensive. Moving on to the QQQ. All right, this is the QQQ. QQQ for the second day in a row closed under a 5-day moving average. In a strong bull trend like this one, as you see right here, we want to see the price action above all moving averages. Right now, it's below under one of our moving averages, so it's not that bad. However, it's definitely something worth mentioning, I believe, so we should definitely watch out for this. Okay, so 2 days in a row under the 5-day moving average. I want to see QQQ get back above the 5-day moving average to continue the bull trend. If not, like I said, I will be looking for buying opportunities because this is a strong bull trend, as you can see with this daily chart. Okay, if we go, see, boom, lost uptrend. Okay, this type of market, you want to buy the dip. All right, until proven otherwise. When we start seeing our moving averages trading like the 5-day to 13-day start crossing below the 20-day price action, below the 20, that's when you start, oh, okay, this is a bear market looking like a bear trend. Right now we do not have that. It's pretty far. So yes, 2 closes below 5-day moving average. It is concerning. We got some areas of imbalance where I'll be looking to enter. This one's already filled, okay, because like I said, they get filled. We have one up down here, have a big one down here. So those are the 2 entries I'll be looking for bullish entries where I believe we'll get a bounce. Down here around the 356 area, well, we have this support level as well, around the 360 area and area of liquidity just under it. So we'll see. I'll look to enter around that level. And if it drops low, I'll look to enter around 346, get a nice bounce back up, maybe a relief rally, because that is a big drop if it does drop. Okay, other than that, definitely don't buy it. It's not a buy right now. Stay in neutral. Now, if we look at the 1-hour chart, this is the 1-hour chart. This is the area of imbalance that got filled. Let me move the moving averages. Give you a better, cleaner picture. Okay, we got area of imbalance right here, up here, all this red area, because we got a lot of touches and it failed. So market makers create a lot of pool of money up there. We have an imbalance right here. As you can see, got this downtrend. All right, it is in a downtrend, and we got some areas. We got some areas of imbalance down here where I'll look to enter. But you know, if QQQ breaks back above 366, I think we can head up here. Have a price target around 369, maybe 370, where we get a nice pullback. If not, it's fine. Definitely be looking to enter. Okay, now I usually look at daily time frame stuff, but you know, smaller time frames not too bad because the big time frame they give you the big picture, but the smaller time frames, you know, you can see the small details. Granted, I don't use the 5 or the 15. Okay, the smallest time frame I probably go is like a 30, or you know, if I want to look at small intraday stuff, I'll look at the 1-hour chart like I'm showing you guys right now. Okay, so I have this area of imbalance. I think it'll get filled, you know, but maybe we'll get a nice scary drop first to scare everybody. Okay, and then boom, we'll go back up. Okay, so yeah, it's looking a little iffy right now, but like I said, we're in the bull market, so look for them buying opportunities. Okay, when you got, you know, when you got a plan, and decide, oh, this is the levels I'm gonna enter, and then you see the the price dropping down to the level you want to enter, it helps you not panic. It actually makes me happy. Like, oh, I'm so excited because I get to finally get an opportunity to enter. Right? That's how I look at it. Okay. I don't know how you guys look at it, but it's a tough game to play. All right. So I'm neutral. I don't want to say bearish because we are in a bull market, but I am neutral, meaning I'm standing on the sidelines, and I'll be looking for buying opportunities. All right, so that's SPY, that's a QQQ. Moving on to ARKK. So ARKK worked out for me today, even though in the post market it dropped a bit. But I told you guys a couple days ago that I wanted to see ARKK drop, fill the imbalance out, and I like to enter just below the moving average of the 50-day, which it did. Worked out today, had a big green day. Okay, I told you guys I'm bullish. I'm waiting to see if ARKK can break his 20-day moving average. It's been pretty annoying. Okay, we had a couple tries and it's failing, but I believe in ARKK. I think it's gonna get up there. Okay, Elliott wave, baby. Got the wave 1, 2, 3. It's gotta be 4. Okay, then we gotta head up, fill this gap. Gaps get filled. All right, so this would be wave 1. This could be 2. Now we're heading into wave 3. Wave 3 is the longest wave out of all of them. So, a lot of people say they want to buy it for the low and sell for the high. But when it comes down to buying for the low, get a little scared, right? Okay, so my buy zone is from 110 to 117 right now. Even though it dropped a little after market, it's still out of my buy zone. So, I'm still in profits, and I believe we'll head more upside, okay? So, that's the indices. Moving on to Bitcoin. Bitcoin, this is the RSI right here, getting pretty overbought. Now, I don't really make that my #1 decision maker, but it does help assist me, and I think it's worth mentioning. And I did say to you guys yesterday that it's following Wyckoff accumulation, and we're either still in phase B or in phase C. Okay, if Bitcoin breaks up like above 41.3K and closes multiple days above that, most likely we're in phase C, guys. This is phase C right here. That's accumulation 2. This is a possibility where it moves sideways. But, this is a possibility as well. So I'm thinking if we're in phase B, we're on this around here where it's retesting the AR level, and we could get a dip soon. Get a nice dip back to a previous high, and then we'll go break the AR level. Okay. Bitcoin. So we could get a nice dip, fill in some of these imbalances, and then go break the AR level, get up to 41.1K maybe, and then the dip, and then it drops back down. Okay, and if that happens, then we're definitely still in phase B, and there's definitely more buying opportunities in the future, definitely, and before the real bull market happens. So 30K to around 26K would be my buy zone if we are actually in phase B. Okay, but if Bitcoin breaks 41.3K, then we're most likely in this area in the phase D, where we are officially back in a buy the dip market, aka a bull market. Okay, so if that does happen, guys, buy every dip you can, because Bitcoin's about to go to the moon. But if not, still gonna be more buying opportunities in the future. All right, so watch for those scenarios before you make your decision. Okay, so I'm on the sidelines. I'll be watching, and I'll definitely keep you guys updated if I notice anything in the next video. Okay, so that's all the stuff I wanted to cover. But before I go, yesterday I mentioned that for any members or subscribers or viewers, if you got any stocks that you guys like for me to look at, mention in the comment section. So we got a few. I'm gonna start off with AYX. Okay, so keep in mind this is all technical analysis. Okay, not fundamental analysis. A lot of time the news, they're FUD. They fill us with fear. Market makers, they use them to mess with our heads. But then again, I look at the charts, they don't lie, man. Okay, so I might tell you something you like, I might not tell you something you like. I'm gonna be as objective as I can. Okay, so this is AYX. It's been in a very, very strong downtrend. It's dropped a lot. Okay, but it's possible that we are in accumulation phase right now based on wick off. Yes, wick off is not just for Bitcoin. Wick off is for any stock really, any crypto, any indices really. Okay, it's all about manipulation. Okay, so this is obviously manipulated, right? So it definitely looked like an accumulation level. This was ST in phase B. We got this test back up to the AR level, and then it dropped. Okay, so based on wick off, we're around this area. Okay, keep in mind this is schematic 1. Is also schematic 2 that could also play out. Excuse me, sorry about that. This is schematic 2. All right, where it does drop, it doesn't drop lower than ST in phase B, but it starts getting choppy. Okay, so definitely watch out for that, for any possible double bottoms above these levels. Okay, if not, I'll definitely, if it goes for the spring, I'll definitely look to accumulate there. So if I look at that again, ST was around 73.02. So if it drops below 73.02, boom, guys, I'll definitely enter. Okay, if not, this could be the potential where the double bottom is. So 74.53 down to 70 bucks, maybe 69 bucks. Definitely a good buy zone. Had an area of imbalance here that got filled. Okay, so imbalances get filled, guys. So these are some imbalances that did not get filled. They got one up here. All right, so here's what's giving me a good sign that this stock will head back up eventually. So we got the AR level here. This is an area of imbalance. You can see no wicks to the left, no wicks to the right. In that small area, it was too many sell orders. Okay, so it needs to balance out with some buy orders, right? Here's also the thing. We got this touch right here. We got this touch right there. Double top. Okay, it's not coincident that it got rejected at the level. These are done purposely, right? Market makers, the composite man, the puppet masters. Okay, which means this whole area right here is an area of what? An area of liquidity. All right, meaning, but a lot of stop losses could be here for people who bet to the downside, who shorted this stock. Okay, so I'm confident that this stock will head back up. We also have resistant level right here. Let me scroll back for you. See right here? Got a bunch of touches. 1, 2, 3. Okay, which means all this purple area is also an area of liquidity where market makers will look to fill it and knock people out, take out people's stop loss. Okay, they don't just set these up for nothing. They do it for a reason. And when they get enough people who notice it, that resistant line or level, that's where they screw us over. That's how they make their money. That's how they enter their trades, because they work with a lot of money. Okay, so it may not go up right away, but I think eventually, if you stay patient enough, this stock will head back up. So I would look for more buying opportunities. These are good levels to start accumulating. Okay, from 74 down to 70 bucks, I'll start accumulating and ride it up to 90 something dollars, maybe even go past 100. Okay, so because that bull market will come back eventually. All right, so that was AYX. Look at FSLY, FSLY AYX. Okay, so FSLY is in this. First of all, it's trading under most of the moving average, so its price action is bearish. Okay, so I'm gonna take out the moving averages because you know that it's bearish, right? And here it is. Got it in a triangle formation. Got a touch there, got a touch there. Will we get another touch here? And as far as the top, we got a touch there, touch there. A lot of areas of liquidity all over there, as you can see. So where would I look to enter? This is where I would look to enter. If it comes back to this support line and drops under it a little bit, I will enter. Okay, so my buy zone will be 40 to 44 bucks. Okay, because it's not, they set up the support level. They're not just gonna leave it there. Okay, if it comes, they probably scares people out. Oh, the support got broken, bearish, and then it bounced right back up the next day, or maybe in the same day. Who knows? Okay, so that's where I'll look to enter, from the 40 to 44 bucks range. Okay, another scenario. Bring up the moving averages again. You see that it's trading below all of the moving averages actually, but there's a big window from the 200-day to the other moving averages. Okay, so if I see Fastly getting back above these moving averages, let's see. So if it gets back above 53 bucks, Fastly's back above 53 bucks, and it have multiple closes, there's a big chance that it'll head back up higher to 73 bucks. That's a nice move. A nice trading opportunity right there. We have areas of imbalance here. We have this big old gap right here. Let me move this. See that? Nice big gap. Gaps get filled. Another areas of imbalance. And then of course the resistant level right here where all these areas of, all these potential stop loss could be set up. Okay? So yes, price action is bearish, but there's a lot of I see opportunity. When everybody's scared and fear is taking over them, that's when I start getting greedy. And I want you to be greedy too, but I'm not a financial advisor, okay? You gotta do your research. Have faith in your own abilities and skills. Okay, this is paid. This was also requested by one of our subscribers. All right, looking bearish. This is a pretty new stock. There's not much data for me to work with here, but what I am seeing is that this level right here, we got some bounces. So this is a good area of possibly an entry because it could be a double bottom, possible double bottom. Okay, and if not, if it drops lower, definitely make sure you manage your risk and cut your loss. But yeah, not enough data for me to work with. It looks pretty bearish, but this area where the purple area is pretty interesting. We got some imbalances up here which could get filled. Okay, it could, but like I said, it doesn't have to get filled right away. It could take time. So pay, I don't know. I'm not really. This chart just doesn't impress me. But I mean, like I said, this purple area is a pretty interesting area. If you're gonna buy in, definitely the 27 to 28. Under 28 bucks would be a good area to accumulate. Okay, but yeah, not seeing much with pay. Sorry, I can't tell you much more. But hey, maybe you know something I don't know. This is only technical analysis. Maybe they got some good fundamentals. Definitely check it out. But as far as the chart goes, doesn't look too good. But if you do pick some up, definitely under 28, the 27 to the $28 range looks good. Alright, so that's it for today's technical analysis, guys. I hope I was able to bring some value to you guys and keep you calm in this crazy market. Speaking of markets, continue to beat this market, and I'll see you soon.